Doing great. Today we're going to be discussing Bitcoin. Was that the final shakeout? We've had a couple of shakeouts. We're going to talk about both of them. Is that the final shakeout before the major breakout? Major breakout, operative word. Or have we come too far too quickly? And we'll look specifically over at the equity markets and we'll look at trajectories over past cycles after they've recovered from a V. But first, and right now, we're going to start off by saying, great morning, everyone. Good morning, good afternoon, good evening. It is good that you're here. If you're new, welcome. And if you're not, welcome back. NASDAQ is so far loving today. NASDAQ looks like it has a bit of, let's say, a mission, a new all time high mission, and a nice breakout for us to look at on the NASDAQ. Is Bitcoin going to participate, right? Is that's what the question that's being asked over there, Jay Cora? Is Bitcoin going to participate? Well, let's take a look and see what's going on, and then we'll put it all together. We're going to be looking not only right now at this major breakout, we're going to be looking like at if when Bitcoin's able to make the breakout. We're going to be looking at upside potential targets for that next leg up. Did you guys see this? This has me so bullish. You can see over here, you have the top 10 others. Who did this? Who did this one? The thumbs up media. Holding 19. Corn. Gotta love it. But over here, you have the top 100 corporations holding Bitcoin. And I love this is what I love. First of all, MicroStrategy is holding an unbelievable amount of Bitcoin. I don't think that Saylor's going to stop stacking. I think that he wants to stack as much as possible as soon as possible. Talk about someone on a mission. But here's what gets me so bullish. If you look down at number 3, 21, 21 backed by the Giants, Tether. Tether, the most efficient company in the world right now. By the way, be talking a lot about Circle and Circle's market cap and comparing it to Tether. Was anyone did anyone know, is this true, that 50% of Circle's profits go to Coinbase? Is that maybe why Coinbase has been, that chart is looking really bullish? Is that true? I would like to know to confirm that. But I'm looking at number 3, 21, backed by Tether, SoftBank, and partnered with Canard Fitzgerald. They want to catch Strategy. Strategy holds more than 10 times as much. Wait, more than 15 times as much Bitcoin, and they want to catch them. And then look at the nice one over here, number 8, Metaplanet, holding 11,000 Bitcoin, 3350. They want to, within the next 2 years, stack 1% of the supply, 210,000 Bitcoin. Not only is Sailor going to keep stacking, guys, early majority. It, right now, the change in trajectory of adoption should be really clear. Last year, when we were saying, listen, retail's irrelevant, people did not understand. Last year, when you would see, and by the way, Marathon up over here, number 2 holder, almost 49,000, just over 49,000 Bitcoin. And I was calling them retail, not only Marathon, but all of these corporations stacking, 50 million here, 150 million there, $500 million here. And that's the retail of this cycle. That people could understand in that relation why you see Google searches significantly decreasing for Bitcoin. This is nothing to do with retail anymore. Retail, we're the early adopters. Right now, we're looking at institutional corporate adoption, leading to nation state adoption. State of Texas, taking their first bite of Bitcoin, $10 million allocation. Hey, you got to get off zero. You get off zero, and then you watch that number go up. Then you learn more about Bitcoin. You increase your holding. I don't think Texas is going to stop there at all. All of these companies on the list are likely going to continue to accumulate Bitcoin, and there will be new companies added to that list that get into the top 100, the top 50, even the top 10. You saw, I forget, I don't know, I'm not familiar with the name of the company, but Anthony Papalano just launching a SPAC that is ready to acquire $1 billion worth of Bitcoin. I think they just made a purchase this morning for something like 350 million. Hey, for right now, they're retail, but they're looking to do a little bit more. This has me so bullish, and there's lots of reasons to be bullish right now. Did you hear what happened this morning with Powell testifying? Powell saying, listen, we would have had, like, people make the argument, and listen, we have to just kind of consult all sides here. And people make the argument that, listen, Powell's doing the right thing, not cutting, because, like, the economy here is running strong, right? We're looking at the jobs market holding in. Inflation is still a little bit elevated, headed in the right direction. And yeah, he should not be cutting. And then Powell saying today, he's saying, well, we would be cutting if it were not for the tariffs. And we just don't know what the ramifications would be. And up until this point, as we all know, the tariffs have not been inflationary. I mean, inflation, Jerome, was not transitory, and the tariffs were not inflationary. He'll get it right eventually, I do believe. He's buying himself time. He said over the next 2 months, we should see the data suggesting that the tariffs were inflationary. Listen, it's a matter of time now before they begin cutting. How are the markets going to respond when they begin cutting? Something for us to really, really pay attention to. By the way, retail is gonna get involved eventually, right? And retail is gonna really feel that FOMO. When it will be, how it will be, we'll find out. We're not even close to there. Um, let's start just taking a brief look at this chart, and then from here, the next thing that we're gonna do together is we're gonna look at um, projected targets if we get this major breakout. And then after that, we're going to look at the equity markets. We're going to look at what's going on when markets have had a 20% drawdown and then recovered in a V type fashion and past trajectories. And then we're going to take a look at our positioning. And by the way, we got a lot going on. FNGU is back. We got Tesla pending long, and we got positions building in NVIDIA and TQQQ. Cardano still holding short trade, giving back decent amount of profit overnight, still about 13% into profit. And the question is when are we going to see any further participation on the upside? Solana, Ethereum, and Bitcoin. Thank you for the clarification, Ace. Thank you for the clarification. All right, let's get going over here. Listen, we're I have this line over here. This morning, my eyes were drawn over here. I was like, wait a second. Yeah, you guys know that I'm pretty good. I'm pretty easily able to sniff out structure. And the first thing I did then was draw a line off of there, right? And I looked at it and I was like, wow, that's pretty cool for multiple reasons, right? Number one, obviously we have a little bit of structure here. We'll see if that's confirmed later. We see, remember this area when we called out 94,000? If we break below, then we're going to see, and I was hoping that we didn't. I was hoping that we were able to consolidate that and make a leg up. But awareness is a different story. And we said if we broke 94,000, we were doing that from our structure, a little bit different over here, that we would then be looking at a drawdown that was bigger in size and duration in time it would take to recover. Both of those things happened. We went from a 15 to a 30% drawdown. And then obviously it took a few months to recover. We've since recovered, and that continues to provide resistance. That line over here continues to provide resistance. This was a major shakeout. This shakeout was largely caused by obviously multiple factors. One of the major was the coming Liberation Day, the tariffs, as the Trump administration look to change the dynamics of all of their trade with their partners throughout the world, including penguins. And that was a severe market unknown, and it still is. And as we look at seasonalities in a moment, we have to understand that the next couple of weeks, the next few weeks are not favorable. We're on the upside deviation of it right now, and they're not favorable. And then we have this unknown is what's going to happen here as we look for the 90-day pause to come to an end. We were supposed to be seeing all of these deals rolling in and being announced, and we're not. We're not seeing them. Or or are these tariffs going to be is everyone going to get a letter from the United States, the Commerce Secretary, saying these are the terms that we are not proposing anymore, that we're laying down? And will the market be able to absorb it? Is it turns out we saw that it what like Japanese cars being exported into the United States. Actually, it was the Japanese auto manufacturers that were eating the costs. They have not been passed on to the consumer. It remains to be seen, and we will be seeing. By the way, Powell might have been hoping and looking that these massive tensions, these massive conflicts in the Middle East were going to make the price of oil rise, and that would then be priced into the inflation data, and he'd be like, "Look, it was the tariffs." But it doesn't look. I mean, listen, this we'll see what happens. Not 24 hours from now, not 72 hours from now. We'll see what happens this hour. That's an evolving situation. But oil right now is pricing in that. Listen, that was the worst, and last I checked was back down to $64 a barrel. So I don't think that oil is going to be applying that pressure to the inflation data as we had to definitely be looking for. Um, let's keep going. So this was a major, major shakeout. That's shakeout number one. And often before big moves, you do see shakeouts. We have on our channel a liquidity grab, and that liquidity grab is right over here, right? That channel. And then that wick down was the liquidity grab. This was a shakeout. And now we saw over here another shakeout. Look at that big wick over there on the 3-day, though. That shakeout was obviously caused by the Israel Iran conflict. And right now, it looks like markets are like, all right, we think that's behind us, and we're getting ready to go. Gio, what are you doing? Where have you been? I'm glad that you're here. It is great that you are here. Yeah, for sure. That's a great idea, and more importantly, that's a trade that it's 6 to 12 months. Now, oof, I mean, without even looking at it, it's been bid. Unfortunately, I thought, well, the way that I'm viewing it, I was waiting for a little bit of a better of an entry. I'm not in the trade yet, and I was waiting for and thinking that we were going to see over the next month or two inflation data tick up. Now, the chairman of the Fed says that, so like maybe that will happen, and if that happens, I do believe I'll have the opportunity for a better entry. But since that video, I think that just looking at the 10-year, and bonds continued to be bid. So I imagine that trade continues to move, but that's a 6 to 12 month trade. And I'm looking to go big, and I'm looking for an entry to have a really good risk to reward, reduce my risk a little. Let me go ahead. Number two. So we have two shakeouts. Often before big breakouts, we do see some nice shakeouts. Is this going to be the time that we see that? Remember over here on the bull market breakout? This was the bull market breakout. And then we had the breakout. And then we had that massive boom shakeout. That was like a hold your breath type moment. We drew the box over here, and we didn't know which way it was. Was it going to break out, or is it going to break down? It's impossible to know. How could anyone know ahead of time what was going to happen? You could only know what to do, how to manage it, depending on what depending on how to manage it, however you decide to what you use to manage risk around it. In that case, we had the box, right? If it broke down, then we were going to see further downside, longer duration. In this case, not only did it break out, it broke out massively. This line is interesting. So let me just start over here and I come over to this was a major, major breakout, right? You saw the price of Bitcoin appreciate roughly 40% on the election. And you could see over here, you could see that resistance, that support. If I move it up a tiny bit, you could again see that resistance, that support. If I come back down over here, this looks off of where the resistance came, that test. Watch why I do that over here. Resistance, second support over there. This line, which I took from over here. What about this low over here, the summer of 2021? This is really interesting because that line became resistance after it was broke, breakdown resistance, and then once it was able to get above it over here, that was then over here in January confirmed once again. This line over here continues. I mean, you could see that it's structure, or I could see its structure very, very, very clearly. Look at this over here. This is a really neat one over here. Why? Because that was all support. FTX. If it didn't happen, this line did not break. I am convinced that if FTX did not go under at this particular moment over here, that the markets had bottomed over here in October. Bitcoin had bottomed in October. The drawdown was not 76%, it was probably closer to 73%, which is significant, but it did break. And you could see resistance. Once it broke above, on and then confirmed over here. It's pretty neat, right? Look at this over here. This is really interesting. That same line that we just looked at. I was looking at it from that perspective, but look at that. That was the high of June over there. So crazy. Look at this one over here, the top from 2017. That was the bottom of 2021. Super, super, super. And look at this one over here. This one is really neat too, right? This was, remember, for those that were here during 2018 bear market when price was running sideways, only it wasn't running sideways, really. It was running slightly upwards. When it broke, that was the massive, massive, massive dump down. Look at this over here. When it tested over here off of December 2019, if it wasn't for COVID, that this would not have broke, but it did. And look what happened over here. That's pretty close. I guess this line goes back over to here. It's not so clean. It's not so not clean either, though, and it's very apparent. So that's the line that we're currently up against right now. That was insane. That was insane. I remember this day over here as BitMEX went into massive liquidation feedback loop, and the only way that they were to get it to stop and to stop the fall of Bitcoin was to put the exchange into offline mode. As soon as they took it offline, price was able to recover. Bitcoin massively spiking up, but even still, and this whole period is, I mean, this whole period was there was nothing easy about it. There was still nothing easy about it. This was nothing easy about it. And there never is anything easy about it, right? And that's why it takes a lot of work to stay ahead, for sure. So what do we think over here? Let me just go back one more time and let me just borrow this line. Do not want this is we're looking for de-risk levels. I guess you have to go off the low. We do not want to break this line at any point in time going forward. Let's look at some upside price targets if we're able to break out, just so we have that awareness about us now. And now we're introducing and adding into our structural lines. The neat things about these structural lines right here, as you can see, throughout, go back since Bitcoin's inception, but really since it started trading on exchanges. You could go back 14 years. I mean, you could go back 10 years easily, and you could see these structures. But I love the March, April high, October, November high, the low over here, December and January. It's just the structure of Bitcoin, and it's very clear. We were looking at together what would be the ultimate price target if you were to use a measured move from this breakout of the line up top over here to the low before it. This is commonly used on head and shoulders type patterns. It looks like inverse head and shoulders to me. Some people see a cup as well. Either which way, let's take a look. And we said that that was a 50% move. Remember how far we came from the breakout itself, from the breakout after the election. You saw Bitcoin move up 45%, a little more than 45%. That was just from the breakout of it. What was the measured move over there, by the way? If anyone's interested. And did you go from the peak of the yen unwind, right? From the peak of the yen unwind, or the low of the Japanese yen unwind, you have to the trend line, to the lip, 47% move, and then you saw a price move up 40% after it. So pretty crazy, right? And if that is to happen, if we're able to reach our next target, and let's say by the end of the year, let's say in a reasonable amount of time, I mean, eventually Bitcoin, right, is going to be trading up at those levels. But let's say that it's by the end of the year, and we all know generally how favorable seasonalities get as we get into October, especially November, into December for Bitcoin. And easily, you're talking a 50% move. We've seen double digit returns back to back during those months many, many times throughout Bitcoin's history. As we look at what happens in the equity markets after we've seen periods of a 20% correction with a V recovery, it's towards the latter end of the year as well that you do see price ascending as well. So that's very favorable as well. But we'll look at that so you could visualize that in just a moment. And the target that we gave, if that were to happen, and is pretty lofty, $174,000 on Bitcoin. To me, that a lot of people obviously have targets that I've seen between 150,000 to 200,000 by the end of the year. This seems to be the medium between the two of them. Could that happen if we get the breakout? Everything suggests that that is, when I say everything, if we get the breakout, the technical expectation of a measured move, plus the seasonalities, plus the current state of things, the massive wall of worry that the market's continuing to climb, whether or not you're talking about the massive uh, bomb of Liberation Day thrown into the markets, the war is taking place. There's a lot that could really provide even more uncertainty. But here we are. Let's take a look at what I believe happens well before that. If we're able to get a breakout above, right? If we're able to get a breakout above, I have my eye on a couple of different things. So I want you to be able to visualize as well. I'm watching the red and I'm watching the red and orange line above us over here. So the orange definitely formed some resistance over here. And then the red one is where we peaked out above. So that's the zone of what I would consider on a breakout above to be the ultimate, like, first leg up target, and the highest portion of that target. The one line below it, which is where we just formed after making that high over here, we came in. There's a bit of resistance there. So that would be for me like a very probable expectation. That very probable expectation is coming in somewhere around just below $130,000 on the initial move on the breakout. That is what I am targeting. Now, I don't think it's going to be a breakout and a straight move up. What I mean is that likely, and by the way, something that would be very, very, very probable is you could get a breakout above. You see this trend line over here? Resistance, resistance, an initial move into that line, and then a retest, and then a breakout, and then a resumption above. That obviously is the expectation, as you if you were to when we do break above that line over here. And this is going to give you a better visual for what that looks like. What is that? Woo! CTM. If you feel inclined, please go ahead and hit that thumbs up and support this stream over here we got going today and help build up the energy. NASDAQ just trading off the highs of this session, and we're into early afternoon into New York. We'll see what happens into the end of the session. But over here on the breakout above, my expectation would be this is the area that we're heading into. That's around, depending on when we break out, because it's upward sloping somewhere between 117 and $120,000. That's the first target I am looking for, right? And obviously that's the peak of it, the very tops of all of there. Coming in if you want to go a little bit lower, right? And then if you're looking, that's close to 117, right? Depending on when it breaks, 116 into 119, right? It's very clear target. And that is what I consider to be a high probability achievement on the initial breakout. Then it remains to be seen what type of umph is in there in that move. Sometimes you get a breakout, it doesn't come back and retest. Often you do, right? You could, and it's perfectly healthy to come back in and retest the breakout, but it's even more significant if you get a nice move up, a slighter pullback that then is able to consolidate before making that next leg up. Next leg up after that, next target, I should say, after that, I think we're coming in and we're testing what I think would be the high probability expected move into not the orange one. The orange and red is my highest expectations. And I think if you look at the orange and the red, by the way, like when we talk about this chart right here and this channel of sustainability, that the orange and red line is the very top of that chart of sustainability. I hope we don't break above it, because when we break above it at any point in time, that means that, well, likely we're going to have some sharper price appreciation in store, but that is going to also end pretty soon as well. So I want to stay in that channel as long as possible. It's not really what I want. I'm just looking at what is the healthiest for Bitcoin and the cycle, and that would be the ultimate what I believe to be very, very, very high expectations. And I think the line below it over here, where we just formed into resistance, that's a lot more probable, right? So you can see coming into November, $150,000 Bitcoin. Listen, if we're hitting $150,000 Bitcoin into the end of the year, I think that is fantastically good and healthy going forward into the next year. If we hit a measured move by the end of the year, 172, whatever, above 170, 175, that would be well within expectations. And I wouldn't think anything crazy is happening. I would just say that was a measured move after this last pattern that we just saw, very similar to how the expectation off the last consolidation led to that initial target of the measured move. Could it be as fast as this last one after the election? I mean, you never know what's going to happen, and people will say, "Well, everything was priced in." You know, is the Bitcoin Act going to be passed? Are we going to? We don't know what qualifier is going to come in that could cause a massive move up. But anyway, those are, and I hope, very clear expectations of what we're looking at if we get when we get this breakout above this very important resistance that we have been consolidating. The last little bit of shakeout, usually before the big move, setting it up. It looks very good. It looks very promising, and I hope that you know we're able to see it realized pretty soon. I think a lot of people right now are coming to understand our forward thinking here when we talked about the current phases of Bitcoin, and it's no longer that 4-year cycle behavior. 4-year cycle structurally different, making that all-time high prior to the halving for the first time ever because of the adoption increasing into the early majority. We look over here at, and a lot of people could still make the case. Well, this looks very similar to what we saw in 2016. And it looks very similar, except a lot longer, but it looks very similar to what we saw in 2016. Are we going to see this retail spike, Bitcoin, you know, a baby at this particular point in time? And still, Bitcoin trading at $1,000 and then able to go to 19,000, led by retail. Like this was retail moving the market cap. Now we have a $2 trillion market cap. Are we going to be able to have and see that type of, without some type of, again, something like the Bitcoin Act being passed that would really trigger just when we say nation state FOMO and fear of missing out, it's no longer a fear of missing out. It's actually the you're missing out. If you're like a G20 nation and you don't start accumulating Bitcoin now that the United States is, you are going to be left behind. That so it's not FOMO, it's not fear, it's the reality, ROMO, the reality of missing out it will become. That's the only thing that I could see that sends Bitcoin into some type of euphoric move to the upside. Otherwise, I'm looking for this current trajectory, this length. And by the way, so you saw this move up, reversion to the mean, move up, reversion to the mean, move up, reversion to the mean. But it's the same line, right? Well, I can't eyeball it well. I'm trying. It's the same line, right? And could we see and are we seeing a change in dynamic where this ascent continues? I certainly hope so. I certainly do, because I think it's really, really, really. Hey, God bless you. Thank you, Gio. I really appreciate the support. I really do. And I think more than that, I think a lot of other people are beginning to see it. And when we started pointing this out, when we first pointed it out in January of 2022, of course nobody saw it. It was way too early. But we this chart is from January 2022, right? Obviously it's made a little bit pretty and adjusted, but same exact chart in January, but no one had the foresight at that particular point to understand. And then at this point, I'm seeing over the last month a lot of people, a lot of influencers out there, a lot of analysts, a lot of enthusiasts beginning to understand what's happening. The last boss here is that you have now a lot of the diminishing volatility power law theories, and they're going to learn that there's no such thing as volatility decay as you move into the early majority phase. And the early majority phase has me extremely bullish. Everyone can now see the change in adoption and the new players that are here. And this is going to continue to grow. This is not only on the corporate level, this is beginning to grow more significantly on a government level, and that's the trajectory we're headed in. Everybody, everybody should have Romo with Bitcoin. The reality of missing out. So you love to see it. I love to see it. At least people learning and embracing. Let me check in over here, and we'll start with. I said we are going to do equity markets next, and I wanted to Nasdaq looking strong here today. Um, Nasdaq getting ready to hear today on this live stream. Looks like it's looking for new all-time highs. Love to see it. I love to see it, but I want to dig in a little bit further with you. And first of all, just to briefly touch base yesterday on this seasonality chart, and you can see that as we enter this weekly period, that the blue line here is the medium, and this is generally the trajectory that we hit. Remember, we have buybacks going into blackout right now. That is a decreased demand in bids into the market. And then I'm looking at the massive uncertainty of what happens after the 90-day pause. And the NASDAQ is saying, I don't even care. I'm breaking out to the upside deviations. Are we going to see over the next 2 weeks a bit of a pullback here and then to continue on that trend? I don't know. We're just watching it. This is what I want to show you. This is from Jurian over at head of macro, I believe, at Fidelity. And he's put out a chart, the anatomy of a 20% drawdown. In black is where we are today. And I want to focus in over here on three different things. The first one that I want to focus on over here are, you can see that this is like a V. Okay. These are not like a V. These these recovered from a 25% drawdown relatively quickly, right? During, like, before we have made the recovery over here now, or over here now. And most of these, from the time that they recovered, they went into like sideways, at least through into the fall. From where they are now, they went sideways into the fall, and then you see roughly 50-50. You see a couple from that point able to make a move up into the end of the year, continue going sideways, a couple of more, and then others fell off a little bit more. Those that had not recovered by this particular point in time that we have recovered, and you can see a lot in this area over here that I'm highlighting, they tended to continue to go down into correction into the fall, into September, where a lot of them continued that downward trajectory, right? It looks like long drawn out business cycle recession. Do we have, Jordan? We don't have that anymore. Since 2008, this is all about the Fed cycle. Listen, I don't believe that personally, but are there majorly different dynamics in the markets today than ever before? Well, yes, and in so many levels, it's ridiculous. So I don't want to get into that or open up that can of worms. What I do want to continue doing, though, over here is looking at point number two. There are a few different that I want to focus on. Jurian is highlighting them. If you look at blue, 2015, you could see that price recovered to where it is today. It then, in 2015 over here, we went sideways into the fall, a pretty strong correction throughout September, which tends to be not a very welcoming month for the equity markets. A lot of volatility, and then even by the end of the year, it was basically flat. So a lot of people think from where we are today, there's a good high probability that we go sideways. I don't Listen, if we get through this major obstacle of the US and its trade deals and whatnot, that might not be the case. Is this time different? It seems like it's been different for the last 2 years. And don't forget, in the last 2 years, we saw, for only the fourth time in the last 100 years, that the S&P have back-to-back years of 20%, greater than 20% growth. So even last year, we saw the whole year riding the upside deviation of what markets normally do. Let's focus over here on 1998. In 1998, by the way, the markets had just completed back-to-back years of 20% gains. That was one of the years. And it didn't stop for the next two. It led to, obviously, the massive, massive bubble that wasn't really seen until the later part. Remember, most bubbles, the last third is makes up, or the last third of it, the gains made in the last third happen in a very short time towards the end. And in 1998, we were in a similar situation. We had just put up 2 years of 20% returns, had a 20% drawdown, recovered in a V almost exactly to where we are right now. And this didn't stop. This went straight up. And by the way, in 2020, it had another 2 years of 20% gains. So is that a possibility? It seems like like an anomaly, but here we are right now. If you look over here at 2018, you could see that in 2018, in the pinkish over here, you could see that from where we were. By the way, we're higher now than in 2018. 2018 continued up. It had that small September hiccup and then traded basically flat, slightly up into the end of the year. And then 2020, everyone is obviously familiar with, when we had the global lockdowns, and you had that. I mean, obviously, the one thing different about 2020 was that the Fed was into uber easy monetary policy. The printers weren't running, the printers were roaring. And that month into the end of the year was straight up and to the right. Once all of the macro bros by the summer figured out that no, we're not going to see an insolvency event, bu- buy bonds, wear diamonds as the secular bear market starts. It's all Luna is almost risk free, and there's an insolvency event coming. If you know, you know, you got to know. So where we are right now, are it seems that from the average, the medium over here is kind of sideways into the end of the year. You have to watch out for that September hiccup, and then that's just all we can say. What does that mean for Bitcoin? Is Bitcoin going to be doing a lot of sideways into the end of the year? Adopt if the equity markets are going sideways into the end of the year, by the way, if they are, the adoption rate of Bitcoin should cause Bitcoin to what people will say is, well, it's breaking the correlation. We should see some continued inflows into Bitcoin, and whether or not we hit 175, that move towards 150 seems highly probable, well within the cards. Obviously, the only thing that's going to stop that is not getting the breakout, having a false breakout, a breakout that then is failed, which is why there's never anything easy about it. We'll have to navigate it as it comes, follow the technicals, and stay on the right side. Could there be trouble ahead? It's amazing what we've seen so far this year, and that markets right now are challenging the all-time high as we speak. Powell testifying today, testifies again tomorrow, and then Friday is core PCE data. Powell saying we're not in a recession. That's an interesting one. Um, anyway, I'm not going to get into Powell right now. Dollar testing a major breakdown here as the flight to safety from the Middle East tensions comes to wane down. That could be a major breakdown. Look, I'm not sure of the ramifications if it breaks down in so much as that if you would have asked me if the US dollar in 2025, as measured by the DXY, is going to correct 10%, what would Bitcoin do? And if you told me that Bitcoin was going to be flat, I wouldn't believe it. I would think that Bitcoin was going to make a massive ascent on a 10% correction. It's not what's happened. We'll have to watch, figures it out. Here's bonds over here. 10-year continues to be off of the buy impulse. It's inverted. Bond, let's take a look at the 2-year. Wanted to take a look at the 2-year together. And did I put marks on here? I didn't. So since our like let's say release of this trade, we're obviously seeing bonds right now a little bit bid. I don't really read too much into that. It's too soon. Powell is saying now, right? Let me go back to Powell. He was talking about some cuts, getting ready to cut into the end of the year. I don't see any headlines on it from over here, so I can't highlight it. He's saying that he thinks in the next month or two we'll be seeing. Anyway, sorry guys, I'm just trying to take this all in. Powell, Taylor rule says you should be looking through this. That's right. So why aren't you cutting rates? Taylor rule says we're right where we should be, and one of them shows rates should actually be higher. Um. Anyway, back to this over here. I feel like I had a different chart. I don't. I'm going to go with this. Bear with me 1 second over here. I am waiting. I am looking to get closer. This is when we do the video. I'm looking for closer into this line over here, and then being able to manage my risk by if a price breaks above this line over here, or this. Uh, sorry guys, lost the flow. If price breaks roughly above this area over here, then I know that I could get out of the trade, and I'm wrong. And you know what? Listen, there's a lot to unfold. I'm continuing to wait it out. I'm not going to chase down over here, and I'm just looking to pick my entry whatsoever. But this trade, because Powell now talking about obviously the potential, the possibility here of actually beginning to cut rates, a little bit of change of tone and narrative, and you know what? Powell's going to be gone in 2026. Seems that the new Fed chair is going to be embracing easier monetary policy, and we're going to see some rates begin to be cut in a more rapid fashion. And we're going to see the 2 year much lower. I think it's the trade for the next 6 to 12 months, the easiest trade. We looked at the leverage behind it. Is it bullish or bearish? That depends. You know what? As soon as they start, as the 2 year was coming off from September to into February, markets were melting up. The Nasdaq was melting up. Nasdaq was up 20%, S&P 500 up 14%, Bitcoin, gold, both of them roaring upwards. It was extremely bullish. However, it led to a liquidity crisis. Now, this didn't lead to the liquidity crisis. It was obviously the global lockdowns which caused the liquidity crisis. And then this was, as their bid was obviously not bullish. This was a crisis. Now, anytime you have a liquidity crisis like this, the only way to address it is to a deluge of liquidity, and the recoveries out tend to be quite rapid and substantial. So, but the near term, obviously, it was a crisis. So it's, right now though, outside of a crisis occurring, it looks to be very bullish to see bonds going bid, yields coming off right over here. Too late, Powell. Dollar over here testing. Remember, when flipping long over here on the breakout, dollar right now flirting with a breakdown as we're looking at tensions being resolved for now, for today, for this hour in the Middle East. And if you look at what's happened, look at oil. That's interesting. Oil on the massive breakout now coming into that trend line, right? Interesting, as the dollar is also at a critical level here for the next move. Is oil going to be trading below it? And was this nothing more than a massive liquidity grab to send this back down? If you drew a similar line like the one on the dollar over here, that would be oil gets below here, closes below this line, then that's time to obviously get out of that trade. But it breaks down over here, then oil is going much lower than the current low range over here of $56 to $58 a barrel. Our positioning, now that we talked about equity markets, I want to get back into, and I want to talk about a few different things. We'll start off with the easier stuff. And the easier stuff is obviously Bitcoin bull runs remains active in a long trade, suggesting that upside momentum will continue to kick. They say you can't outperform buy and hold, and you could absolutely demolish buy and hold with a simple strategy, reducing drawdown massively. We're looking here at Bitcoin now on 107, currently with an enter long pending. And we're seeing that Cardano is still holding short. Interesting. Let's take a closer look over here. Let's move over to first. We have all four of our 8 hour Bitcoin iterations looking to enter the long in unison. So you have CTM 2.0, the original, the classic. You have buy side only, and then you have our BTT 107 and 108 looking to enter long over here. Now on Ethereum, out of the market currently, is this going to be, is this a spring here? I don't know. But Bitcoin bull runs currently in the market, which means that right now ST2 filter is toggled off, suggesting here that you'd want a lighter filter because we are looking at potential for upside momentum to continue. Cardano is still holding short, getting ready to lock in a decent amount of profit. And I still think the weakness over here of the founder talking about selling a bunch of Cardano to stack Bitcoin must be, if the founder doesn't want to own it, who else is going to want to own it? I think that when liquidity comes back into the market and you start seeing all of a sudden, like, it's alt season, you're going to see obviously Cardano susceptible to that liquidity and being able to do both big moves on the upside and downside nevertheless. Solana still lagging behind. So we have Bitcoin leading, Ethereum in second, and then you can see the weakest here are the altcoins. Stocks, we have TQQQ beginning to build its position here, 17% into unrealized gains, looking very good over here. And you see Nvidia here now 3% into profit. Look at this, guys. This is great because we have now, I'll go slow, right? Tesla, Tesla was pending long. And trading I can't understand why Tesla's not pending long here, but we'll be watching to see what happens by the end of the session, whether or not it is pending long and confirmed for tomorrow. We have IBIT getting ready here potentially for a nice little upside entry if Bitcoin is able to continue its move. And then we have over here, once again, FNGU is back. The ticker after FNGU, our best performer out of all our stocks, which are all absolutely gangbuster, right? You can see, for example, TQQQ, a mere 734% over the last 5 years. Huh, right? NVIDIA, bombastic. Tesla, bombastic. Forget Bitcoin, right? If I go to GBTC, you can see what, because I bet obviously just launched. Very nice. I mean, very nice. Nothing else you could say. MicroStrategy is added to the mix. MicroStrategy, by the way, we're currently trading off of the template released for MicroStrategy, which is getting close here also for potentially looking at the upside. We need the JV filter, CTM filter to participate. And then we are also looking to upgrade that iteration over here. Look at the difference in drawdown instead of 20%, 13%. Obviously, the different in return is also following suit. So you have to this mix to add MicroStrategy, and then FNGU is absolutely a beast. If FNGU had not gone through this ticker change, I think that not only would we be holding TQQQ right now in a beautiful position, that we would be holding FNGU in a beautiful position. It is what it is, and it looks like it's going to be some time before this is figured out as far as the ticker change madness. I guess there's nothing else to call it. So it's still on standby from that effect, but we're getting closer to, once again, completely everything up until the point that the ticker went away is the same. And then you could see like prices has been moving up. Not of FNGU, they changed it. Everything else. Everything else is completely the same historically up until the point the ticker was removed. ST1 on Tesla all of a sudden taking it out. That's going to be coming into the end of the by today's close to find out whether. There we go. V3 on Bitcoin bull runs, which just obviously the difference is it moves the stop loss. This was tagged taking it out of the market. So that's one for the classic, you should say. But if you look at the overall returns, that's interesting. That last trade over here, Jay Cora, that takes the performance to just about equal now between the two of them. Interesting indeed. haven't got into the stocks on V3 and V4 to make enough progress on that yet. So first thing I'd like to do would be to get out the V3, V4 on Bitcoin, Ethereum, Cardano, and Solana. And then yes, I mean our I'm so stoked about our current stock uh, lineup over here. It's ridiculous. We had a great lineup when it was T Triple Q, Nvidia, Tesla, and FNGU. Adding IBIT and MicroStrategy to the mix over here, I think is absolutely beautiful. It remains to be seen the difference between IBIT and MicroStrategy. MicroStrategy is a large outperformer overall, but they seem to take a lot of the same trades. So how one allocates their capital between the two of them, you know, do you use this, for example, you have one, two, three, four, five, six. Instead of allocating between the six equally, do you go ahead and view IBIT and MicroStrategy as one together? So it's five. And then do you allocate the capital 20% each to the five and with a 10% allocation to IBIT and MicroStrategy? Those are things that need to be thought about and how someone wants to go about it. Coinbase, you're right. I mean, Coinbase looking good over here. I would like to see what Coinbase looks like. It's getting ready here for a big, nice move, and that just reminds me of Circle. And I just want to jump back over here and check as Circle finally, after its massive IPO, uh, into a tiny bit of a correction. Same thing with interesting as Metaplanet in a little bit of pullback. MicroStrategy here today, feeling the love. And then you look at the other awesome IPO of the year, CoreWeave, market suggesting they want it. They want it. They want it. All right, everyone. I'm grateful for all of you. Thanks for being here today. If you haven't already on your way out, just take a second, hit the thumbs up. Guys, replay crew, lots of love. Big shout out to everyone. Everyone have a beautiful day. God bless you. And I'll see you all back on the inside.